I love Bitcoin because I know my kids are going to need it. And what hurts me the most is that the Fed is invoking pain on many millions of children, primarily in less privileged nations than Canada and the United States, but eventually coming to Canada and eventually coming to the United States in the form of either a global depression or the fact that is they'll have to live with high inflation. The truth is, I mean, there's not everybody believes my methodology of valuing Bitcoin, and that's fine. That being said, I've had some really complimentary, personal feedback, including one guy it was a classic. He actually said this publicly. He goes, I'm a math nerd. I hate Bitcoin. He goes, I own it. But your thesis is the most compelling argument I've ever heard for why I should own a little bit more Bitcoin. So here's a guy who actually hates the asset, hates the technology, understands the asymmetry of the trade, wasn't sure why. He was basically valuing it through the options market and saying, yeah, I can see a 20, the volatility implies that with a 5% position, you can get, 15 to 50 times return. So he owns like probably 5%, but he goes, I was never into it for any value. And he goes, the CDS methodology, he's probably an ex-financial guy. He understands options well enough that he certainly has experience there, but he basically said, this is the most, this thesis helped me get over the edge in terms of why I do own essentially insurance on the fiat system. They basically value Bitcoin as simply as this. You take the default, the current credit default swap market on the USA, and you multiply that by its unfunded debt, which is funded plus unfunded debt, which is now over 200 trillion US dollars. And you come up with a valuation just on the USA that Bitcoin should be worth approximately 1.2 trillion in market cap. And given that Bitcoin is trading for under 400 billion, you're getting very cheap insurance on the USA. But here's the kicker. You're getting insurance on all the other countries in the world for free. Okay, if you think of it just that way, it's cheap protection on the USA. It's about 1/3 the value it should be if you were just protecting against the potential default of the USA, which is very small, but not zero. But still, when you're dealing with $200 trillion worth of debt, that small default probability translates to an insurance premium of 1.2 trillion. Well, you're getting all the other countries in the world for free, Marty. Default for free. Now, the USA will be the last fiat currency to fail, in my opinion. Those are the currencies that you really should be worried about. And those are where people in those countries live that need Bitcoin even more than people who live in the USA. And then I'll go a little further, and then people that live in Canada. But the truth is Canada's in bad shape. So I need Bitcoin way more than you need Bitcoin as a US citizen. But compared to places like Nigeria and soon to default Turkey, et cetera, perhaps some Southern European countries, I will leave those off the map of potential default candidates. But here's the point. Lots of people in the world need insurance on the failure of their fiat currency. It's friggin' cheap. I can't say it any other way. The truth is, all fiat currencies are melting ice cubes. It's just their rate of decay is relative. And right now with the DXY, the DXY, measuring the strength of the US dollar relative to other melting ice cubes, it's showing the strength of a fiat currency that has increased its interest rates. So the attractiveness of lending money or holding money in US dollars has increased. Everything else being equal. Remember this, people. All fiat currencies are melting ice cubes. The US dollar, though, is just the best looking horse at the glue factory. Okay, that's all it is. All right, it's like you're either the best crack house on a crack street, whatever you want to call it. It's just the best of the worst, and it's bad. If you're a pensioner in England, imagine in the last 90 days, you haven't opened your statement for 90 days. Well, let's say it's 9 months. Okay, let's just say, oh yeah, end of 2021. Let's see where I am in September 2022. Holy shit. Yeah. I'm down 30%? Like, are you kidding me? So that's what's happening. You worked for the post office in UK. You open your statement and you're like, honey, we're not in that good shape anymore. And this is real life shit. It is impossible to have any sort of quantitative tightening anywhere as a whole in the debt markets because total global debt has reached a point of over 4 times total global GDP. You have to print. Somewhere in the world can try to quantitative tighten, but that just means elsewhere in the world has to print more because it's a ecosystem made up of total debt, okay? Now, given that the USA is the world's most important economy and the world's largest debtor, them pretending that they're going to do quantitative tightening is theoretically possible. It just means that everywhere else in the world has to ease so much more. You're going to have to live with it. You'll probably have to invoke some sort of form of yield curve control to control your debt spiral. But what it means is fiat debasement is 100% certain. Like, I don't know why it's so difficult for people to understand that in a debt spiral where the increase in interest expense is what is growing your debt in the absence of any increased deficit spending because of entitlements or military, you have to print. It is the error term. It solves this debt spiral conundrum. It's like the simplest math I've ever seen. There's not going to be any capital gains this year, people. There are destruction in the equity markets, destruction in the bond markets. So that portion of your tax revenues is gone. Well, I'm going to give you the conclusion really quick. If the USA was a corporation based on its debt metrics of simple interest coverage of around 1 times, which is to say the USA only has about 1 times excess revenues over their entitlements and their military spending, you have 1 time interest expense coverage. A 1 time interest expense coverage ratio for a corporation puts you as a triple C. Full stop. Triple C, okay? 1 notch above the double C level, which indicates financial distress and restructuring. And everyone says, okay, well, the USA is too big to fail. I agree, but not with 100% certainty. I don't want it to happen, but when you're a triple C rated equivalent corporation, you're basically a zombie country. And that's the best horse at the glue factory. There's the Armageddon scenario as far as I'm concerned. We don't have to worry about the USA. What you really have to worry about is the European Union falling apart. So in James's thing, you can see the stresses in Italy, for example, in Portugal, the infamous pigs, right? Portugal, Italy, Greece, and Spain. That acronym, I'm not naming it. That was a great financial crisis acronym that, still holds the same amount of concern, in my opinion, today. And in fact, is worse today than it was in the great financial crisis because the credit metrics of the countries are so much worse. Canada will likely fail, I say a decade, but let's even say it's 3 years before the USA. And we are in bad shape, okay? Like the credit metrics of the USA are not looking good, but Canada is like off the charts worse, okay? And the rating agencies are refusing to acknowledge it. That's probably political, or, they realize there's too big of a risk to downgrade. It starts the run on the country, essentially. US dollar wrecking ball is causing some serious pain throughout the globe. And I'm not really sure what the Fed is thinking, quite honestly. Like, I cannot believe that they are this blind to the reality of the credit stresses that are building in Europe. And it appears that they are blind to it. I love Bitcoin because I know my kids are going to need it. And what hurts me the most is that the Fed is invoking pain on many millions of children, primarily in less privileged nations than Canada and the United States, but eventually coming to Canada and eventually coming to the United States in the form of either a global depression or the fact that they'll have to live with high inflation. Neither outcome is good. The flip side is all paths lead to Bitcoin. So I think they've painted themselves into a corner. I'm not certain they know what they're doing. That being said, I'm almost positive they have no idea the suffering that they are invoking on the least fortunate of the world. As succinctly as I can, if it wasn't for Bitcoin, I would be apoplectic. It's just, I'm so thankful, not just of the instrument, but also of the community of like-minded people who seem to care. Having spent my career on Wall Street and Bay Street in Canada, but primarily trading with Wall Streeters, the world is probably 85% takers to begin with, right? 85% of the population of the world are probably takers and 15% are givers. And on Wall Street, it's probably more like 99% takers and 1% giver. Okay, that's just the reality. And in the Bitcoin community, it's the flip. It's like 85% of Bitcoiners are actually givers. They care. And there are certain, and obviously I'm just playing the math. I'm not going to point people who I think are takers within the Bitcoin community, because let's look at the positive. It's such a positive community of people who want to try and help. Now, some of us, yourself included, need our bedside manner or our table manners are a little rude, right? And, but we got to call out the bullshit. And what gives me hope is that I'm just trying to teach people that same stuff that I learned. It cannot continue, as you said. And the longer that we whistle past the graveyard, the more severe the consequences are going to be.